Hi, this is Jason, Chief Technical Analyst with ToroAlerts with your weekly market recap for the week ending December 16th. A lot of volatility in the markets this week with some downside selling pressure in both crypto and the stock market. So let's dive into the charts and take a look at what we're seeing. Starting out with the Bitcoin chart, we can see that we had a couple of days of selling pressure on Thursday and Friday. We actually peaked out with a short-term high at about 18,500 or so the previous day on the 14th of December. But that ultimately was what looks like the short-term top after a little bit of a move to the upside. And now it looks like we are seeing some selling pressure, holding up just above some pretty major volume support right around 16,500. But I'm actually short Bitcoin right now. After I saw that breakdown, I went ahead and put in a new short position, as I think there's a decent chance that we're going to be heading lower sometime in the near future. It's possible we might see some sideways price action on Bitcoin between these between about 16 and 18,000 or so. But I think there's a decent chance that we'll see a breakdown to new lows, and likely will be looking for a drop down to about 12,000 on Bitcoin is my next downside price target. So I do have a short on Bitcoin right now, and we'll be looking for some downside pressure, potentially down to that 12K mark. When we take a look at Ethereum, we also saw a pretty big breakdown in Ethereum, broke down below that 1225 level, which was kind of a trading channel that it was stuck in for quite some time, between 1225 and 1400. So we're now down below that. So this also looks like a potentially good short as well, and we'll be looking for a possible bottom down around 900 or so on Ethereum. And then diving over to the stock market, taking a look at S&P 500. We saw some big selling pressure to finish the week off. We did start the week out positive, and we actually got up, it looks like it was on Tuesday, we actually got above this major trend line as well as an anchored VWAP position. So we opened the morning with a lot of excitement, breaking above some major areas of resistance, but then we saw a massive sell-off, ultimately closing just below that 200-day on Tuesday, and then Wednesday, Thursday, Friday just down from there. So we ultimately saw a pretty big breakdown on this upside move that started about mid-October, and now it's looking pretty bearish, I think. So I think there's a lot of reasons why there's not going to be a lot of people taking risk over the last couple of weeks after a pretty challenging year in the markets. And so I think the best bet is to the downside to likely close the year out. I think the idea of a Santa Claus rally is not very likely anymore. And so I've actually got a few shorts in on the markets. I'm shorting the S&P 500 as well as the NASDAQ and a few other indices, and so a few sector shorts as well. So definitely looking for some downside pressure on the S&P. We may chop around between 370 and 390 or so. If we did get back up above 390 and hold that, then that might change my mind as far as the sell-off, but I think there's a pretty strong chance we'll stay below that 390 level and likely retest that 370 on the SPY, and then there's even potential that we could ultimately retest our previous lows, which was in early October, which would put us down to about 350 or so on the SPY. So looking for some downside selling pressure as long as we're below that 390 level on SPY. And when we take a look at our breadth action on the S&P 500, we can see that we've seen some deterioration in breadth as well. The S&P 500 stocks were pushing about 65+% that were above its 200-day moving average just a little while ago, and we're now back down to just slightly below 50% of S&P 500 stocks above their 200-day moving average. And then stocks above its 50-day moving average is dropped down to about 58%, where we were not too long ago, right around the end of November, early December, we were sitting well above 90%. So we've seen a pretty big breadth deterioration as well. And then when we jump over to the NASDAQ and the triple Qs, we can see that we had a lot of selling pressure in the NASDAQ this week as well. We ultimately did get up and almost retested that down channel trend line, close to that 200-day as well, but we didn't quite get there. And now that we've seen that selling pressure drop below this Fibonacci extension at 282, definitely looking like some more downside pressure is likely. We're also below our 50-day moving average, and so there's a little bit of support around that 270 level on the triple Qs. But if we lose that, then we'd likely be retesting those early October lows at around 255 on the triple Qs. When we take a look at the Dow Jones Industrial Average, we have been a lot stronger in the Dow Jones Industrial Average compared to the other two indices. We did ultimately get down and retest that 50-day moving average, and then we did get quite a bit more of a hammer candle stick on this daily close for Friday. So maybe we'll see a little bit of a bounce going into the Dow Jones Industrial Average going into next week. But if we do see it shoot down below that 50-day moving average, which is also right around the 200-day moving average, then that would definitely be pretty bearish. But overall, I still think bearish is probably the best bet for really all the major indices. But of the three, the Dow still is holding up better than the rest. And then when we take a look at our Dow Jones Transportation Index, we were looking for potentially a confirmation of that move in the Dow recently. That ultimately didn't materialize, and we were looking for a potential breakout from this down channel trend line. That also didn't materialize, and then we ultimately saw a pretty big move to the downside. And so a couple of weeks of pretty tough selling pressure in the transportation index, so I think it's likely going to be heading lower on transports as well. When we take a look at our Russell 3000, we can see that we ultimately came up against that 50-week and that down channel trend line, ultimately failed off of that, resisted off those levels, and is now heading lower. So that's looking pretty bearish as well, and we'd be looking for maybe a retest of that 200-week moving average and then kind of see where we go from here, but that's also looking pretty bearish as well. And then we jump over our large caps, our Russell 1000, the IWB. We did ultimately get up and retest that 50-week moving average, but we just rolled right over from there, and then ultimately lost the looks like the 150-week moving average this last week as well. So it looks like we're potentially going to be heading down to potentially retest that 200-week moving average on the large caps, which would put us right around 203 or so on the IWB. And when we look at our small caps, we lost the 200-week moving average in small caps, but we did ultimately find some support at 173.50, which has been a pretty big area of support and resistance in the past. And so we'll see how it reacts next week. If we lose the 173.50 and head lower, I'd be looking for a retest of that 161, 162 or so on our small caps, which is a anchored VWAP position that's been a key area of support a couple of times already. If we do potentially hold support going into next week off the 173.50, we might see a little bit of a bounce, but we'd likely be looking to retest that 200-week and then kind of see where it goes from there. And then looking at our growth versus value, growth was starting to look like it was building up some momentum and possibly breaking out, but ultimately we had a failure off of that down channel trend line, and now it looks like value is starting to outperform growth, or at least have some parity with growth, and so it's looking like we're going back to value being the safer of the two spaces compared to our growth markets right now. And then we dive over to our sectors that we track. We can see the United States Natural Gas Fund was our leader for the week, up about 4.5%. Also some energy stocks, both XOP and XLE indexes, up 2 and 3.5%. And the only other sectors that we saw green on the week, we saw cloud computing up 2, biotech up almost 2, ag fund up about 1%, and then home builders up just slightly by 0.4%. All the rest of the sectors we tracked were in the red on the week. And some of the worst performers on the week was the cannabis sector, down 6%, ARC's technology and robotics down 5%, ARC Innovation down 4.5%, Global Lithium down 4.5% as well. And then we also saw a couple other sectors down 4%, including consumer discretionary, steel, ARC Innovation, and retail as well. And then take a look at our oil markets. U.S. oil is currently sitting just below $75 a barrel. We did get down to about $70 a barrel, and that ultimately found support a couple of weeks now. I still think there's a good chance we potentially hit maybe a little bit lower on oil. The U.S. Government has talked about restocking the oil reserves at or below 70, and so I think there's a good chance that we'll likely hit those levels and get a little bit lower. And then we potentially have a pretty big buyer in the U.S. government starting to restock those reserves. We've also seen some deals with Venezuela and the U.S. to potentially expand more oil output. And so while I'm pretty bullish on energy potentially going into 2023, I think there's still potentially a little bit more downside pressure in oil, and so I'm not going long on any energy stocks at the moment, and we'll potentially be looking for possibly a retest of that 200-week moving average, which is currently sitting right around 65 or so a barrel. If we get down to that level and then we start to see price action stabilize and start to head up from there, then I think that'll be the signal I'll be looking for to potentially go re-enter some long trades in the energy space. Then we take a look at our commodities on our CRB index. We did have a fairly bullish week in commodities, but it ultimately gave back about half of the gains. and so still sitting well below the 50-week moving average, and but also just holding up above 267, which has been a pretty key area of support. And we've potentially retested that 3 different times now, at least. Maybe if you count these other weeks, we've really about 5 weeks or so where we've kind of hovered right around that 267 level, and it's ultimately held up as very strong support. So if we do ultimately see a breakdown below that 267 level, that could be a nice short setup for the CRB index, but so far that's been a really strong area of support for our commodity index. When we take a look at the global markets minus the United States, we got up and retested that 50-week moving average. Also retested some support at 52 on the VEU, and looks like we're heading lower from here. I would guess there's a probably real strong possibility we'll probably head back lower and retest that 47.50 level on the VEU, and then see where we head from there. And then take a look at our high yield global bond ETF, our HYG. We did have that massive move up, which was one of the many reasons that we're starting to look fairly bullish in the early part of the week, but then a big reversal on that, and then ultimately dropping down below that trend line and also below a key area of support around 75. So a lot of times when you have failed moves from a key level of what looks like a potential breakout, and then you see that fail, a lot of times you'll end up seeing a pretty fast move in the opposite direction. So definitely looking pretty bearish on the HYG right now, and pretty good chance we'll see that head lower from here, potentially retesting the lows in October, or maybe even retesting the 69.50 level, which was where the HYG was pretty close to bottoming out during the COVID crash. And then we take a look at our precious metals market. Gold was fairly flat on the week. We did have a big move to the upside, and then it ultimately gave a lot of that back. We also saw a similar price action in silver, and so it's looking to me like potentially gold and silver could be cooling off for the time being. I still think this is likely the beginning of a much bigger move in precious metals. So I'm still staying pretty bullish in both the gold and silver space for a 2023 outlook. But right now, I would probably stay away from any precious metals trades. It looks like there's a decent chance we might see a bit of a correction before we likely see the next leg higher in both gold and silver. And when we take a look at the silver on our SLV, we can see a similar price action, ultimately closing out just above 22 an ounce. And it looks to me like we potentially might be topping out and correcting on this one as well. So I'll be keeping a close eye on that. If we do get a nice correction off of this, I'll probably be looking to buy the dip in some of these gold and silver miners and look for the next leg higher going into 2023. But for now, just keeping a close eye on them and looking for a potential correction on them. And then take a look at our interest rates. Close the week out right around 4.2% on our 2-year. We did see some selling pressure on the week on the 2-year, so they did head lower even though the Fed raised rates. So I find that pretty interesting. We've seen a few rate hikes recently from the Fed where the 2-year has not necessarily headed higher after that. So I think we're starting to see more indications that maybe the Fed is getting close to the end of its hiking cycle, even though it's not necessarily indicating that. And we're definitely seeing the 2-year continue to head lower, sitting right about 4.2 currently. And then on our 10-year, we're holding pretty strong around 3.5. It looks like there's a pretty strong area of support at the moment there. If we do lose 3.5, then I'd be looking probably for a leg down to about 3.25. But it's possible that 3.5 might hold the support. Maybe we'll see a little bit of a rally in rates, but I don't think it'll be a big one. If we did see a move up, maybe we'll get up and retest a few of these 10 or 21 day moving averages. But I think there's a pretty good chance that the rates will stay fairly subdued, and I don't think we're going to see any huge rate spikes. And then when we take a look at our 30-year, it does look like the 30-year is potentially holding some support right around the 3.5% as well. And we are looking like we might head a little bit higher on the 30-year currently. So we'll be keeping a close eye on that. It looks like could be maybe some upside momentum in our 30-year rates in the short term. And then taking a look at our put-call ratio, we are seeing elevated put buying protection in the markets right now. Anything above 1 is elevated put buying protection, and we're currently sitting at about 1.33, and definitely a difference from the beginning of the week where we were actually well below 1. And so after the market started selling off, people got pretty nervous, and we started seeing a lot of put buying protection in the markets as things sold off later in the week. And then take a look at our dollar index. Our dollar did see some upside Price momentum in the week, it looks like it was putting in potentially a bottom right around 103.50 or so. We'll see if that can hold as support. If it does, and we can get above 105, we might start to see a little bit more dollar momentum and potentially see the dollar inching higher from here. But right now, it looks like we're chopping around in between about 103.50 and 105. So we'll keep a close eye on that to get a good indication where the dollar's heading next from here. And then we take a look at our yield curves. Our 10-year minus our 2-year is still extremely negative, although it has been improving over the last few weeks. We're at negative 0.68%. And then when we take a look at our 10-year minus our 3-month, we're pretty negative on that as well at about negative 0.63%. And then we'll go and wrap it up with a quick look at the VIX. So the VIX is heading higher, but we are chopping around in between about 21 and 25. We did put in a bottom a little while ago, just above, just at or right around 19. Looks like where we bottomed out on the VIX, and so we are starting to see the VIX move higher. I think if we see the VIX get above 25 again, we're likely going to continue to see selling pressure. And but it is possible we could just see the VIX chop around in between this 20-25 range for a bit. But I think if we do see that bump up above 25, that would probably be another reason to be a bit bearish going forward into the end of the year. So thanks for tuning in. Make sure to download the ToroAlerts app on the App Store. We've got one for stocks and one for crypto, and you can check us out at ToroAlerts.com, and we'll see you next time.